Are you worried at all about what's happening with these types of stocks?
Well, look, I would be considerably worried if you were going to use this as your core investment strategy and you end up trading with a small group of investors after institutional investors have just said enough and stayed away. That is a concern. The main issue, though, I think if you take a look back, you could take a look at what happened with Hertz in 2020. You could take a look at what happened to Volkswagen in 2008, or even the silver squeeze of 1980. You saw a surge. People thought they could buy it, they could jump in, and these prices crashed. And you still can't say how high is high. If you were to take a look at these asset prices during the thick of it, they went up and up. They would double, and then they would crash. And this is just simply not fundamental investing. And that's where people are going to get into problems. And so we're looking for this as possibly a distortion to the markets. We saw it last year already in the case that I mentioned. And there has been some liquidation of good liquid assets by those who've been distressed by all of this. Of course, naked short selling comes with these infinite risks, and they always talk about that theoretically. But in the end, let's look at the big picture. We have a pandemic that we believe will end. We have easy monetary policy for years to come, and a huge share of the world economy is sidelined. There have been 10 million job losses in the United States. There's no reason that we can't get those back over the next year or two.
There's been a lot
That's the opportunity.
Stephen, there's been a lot made about the retail investor versus Wall Street, the institutional investors, the establishment, the hedge funds out there. When you look at the two stories that have developed, it's about getting rich quickly and then getting rich slowly. You work for a private bank. Many of your clients are wealthy, possibly from the establishment. Is there anything that you can read about the changing dynamic or paradigm about investing? Do you feel as though most people want to chase those types of stocks, or is investing for the long term still something that the wealthy in America aspire to do?
All I can say is that technological change, invention, creating new goods and services that we never had before, it's how we create real wealth. That the things that we have in our core portfolios, are the factors of production that make the things that we need, not money, not quick gains in asset prices, not these sorts of things that are inflated away by central banks, but the real things, the units that are demanded of goods and services in the economy. And that's how our clients generated their original wealth. And I think they mostly know that they're going to be able to add to that wealth slowly by being an investor for the long term.
What parts of the market are the most attractive to you and by proxy, perhaps, your clients out there? Where are you getting the most interest? We've heard a lot about things like 5G wireless technology, artificial intelligence, sustainable investing, green technologies. What's caught the attention of your investors?
So these themes are multi-year trends. If you think about hyperconnectivity, what's happening in Asia where 5G rollout is going to be much faster and larger than it is immediately in the West. These are opportunities. Think about greening the world, how solar power is generating a kilowatt of electricity at the cheapest rate, better than fossil fuels around the world. These are long-term opportunities. But the other thing to think about here is that there have been some quick gains in cyclical assets. You wanted to see what we're doing. We invested in small cap U.S. stocks as an overweight in April of last year, up 80%. These shares have gained 30% since the end of 2019. Now, they can probably still have a very good year, but these are recovery plays. There are really strong parts of the world that still have to catch up around emerging markets. And also, if you think about it, high quality opportunities have been left behind. Healthcare stocks trade at the lowest relative valuation, one of the lowest relative valuations in history, and can generate probably that same return with lower volatility and have a long-term demographic tailwind behind them. So we've made some changes already. Again, quite optimistic about the path of the economy. The markets in some places have already enjoyed that and played out that forward-looking view.
Sure.
So we're making adjustments, again, to take advantage of those thematic opportunities, like you said.
Shepard Smith here. Thanks for watching CNBC on YouTube.